Preparing for a National Bank of Kuwait NBK interview questions interview. You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Why do you want to work for National Bank of Kuwait? I'm interested in NBK because it combines a strong Kuwait franchise with regional reach and disciplined risk management. Its brand is built on trust, capital strength, and consistent profitability, which matters in banking. I would bring a client-first mindset, strong analytical discipline, and willingness to learn NBK's products deeply. For me, the attraction is not only reputation, it's the chance to grow inside a bank with high standards and long-term client relationships. While answering, focus on NBK's market position, Kuwait franchise, regional footprint, stability, and why your skills match the role. Avoid generic praise, connect your motivation to client service, controls, and growth. Question 2. What do you know about NBK's business model? NBK is Kuwait's largest banking group and a major regional financial institution. I would describe it through 3 lenses: retail banking, corporate and investment-related services, and international presence. Its strength comes from a large domestic deposit base, trusted customer relationships, and prudent lending. In an interview, I would connect that profile to the role, understanding clients, protecting asset quality, following controls, and supporting growth without taking unmanaged risk. Make sure to cover NBK's core banking activities, domestic leadership, international network, customer segments, and risk culture. Show that you understand the bank as a business, not just as an employer. Question 3. How would you analyze the financial performance of a bank like NBK? When I analyze a bank, I start with the balance sheet because lending and funding drive earnings. I look at loan growth, deposit mix, net interest margin, non-performing loans, provisioning, capital adequacy, and liquidity ratios. Then I test whether profit growth is high quality or just driven by riskier lending or one-off gains. For NBK, I would also consider Kuwait's operating environment, government spending, rates, and regional diversification. In your answer, talk about the bank balance sheet first, then profitability, asset quality, capital, and liquidity. Mention how ratios like NIM, NPLs, provisions, deposits, and capital adequacy connect. Question 4. If you were reviewing a corporate loan request, what factors would you assess? I would assess repayment capacity before collateral. First, I would understand the borrower's business model, industry position, management quality, and purpose of the facility. Then I would analyze historical financials, cash flow forecasts, leverage, debt service coverage, working capital cycle, and covenant headroom. Collateral matters, but it should be a secondary source of repayment. My recommendation would clearly state risks, mitigants, pricing, tenor, and monitoring requirements. Be sure to mention borrower cash flow, purpose of facility, industry risk, management quality, collateral, covenants, pricing, and monitoring. Interviewers want disciplined credit thinking, not just ratio memorization. Question 5. Explain International Financial Reporting Standards 9, Expected Credit Loss Provisioning, in simple terms. International Financial Reporting Standards 9 requires banks to recognize expected credit losses rather than waiting for default. I would explain the 3-stage model. Performing assets in Stage 1, significantly deteriorated credits in Stage 2, and impaired assets in Stage 3. Provisions rise as risk increases, which affects profitability and capital. In practice, strong early warning signals, realistic assumptions, and timely classification protect NBK's asset quality and stakeholder confidence. While answering, focus on expected credit loss, the 3 International Financial Reporting Standards 9 stages, significant increase in credit risk, provisioning impact, and why early identification protects earnings, capital, and reputation. Question 6. What is net interest margin, and how do interest rate changes affect it? Net interest margin is the spread between what a bank earns on assets and pays on funding. When rates rise, asset yields may reprice faster than deposits, supporting margin, but funding costs can catch up. I would look at loan repricing, deposit stickiness, CASA balances, hedging, and competitive pressure. For NBK, stable low-cost deposits are valuable because they support profitability while preserving liquidity resilience. Make sure to cover asset yields, funding costs, deposit mix, rate sensitivity, repricing gaps, and competition. Link NIM to profitability, but acknowledge that aggressive margin growth can carry credit or liquidity risk. Question 7. How would you approach KYC and AML responsibilities in a bank? AML and KYC are not box-ticking exercises. They protect the bank, customers, and financial system. I would verify identity, beneficial ownership, source of funds, expected account activity, and sanctions exposure. If transactions look inconsistent with the customer profile, I would escalate through the proper channel rather than ignore it. The key is balancing good client service with zero compromise on regulatory obligations and documentation quality. In your answer, talk about customer identification, beneficial ownership, source of funds, sanctions screening, transaction monitoring, documentation, and escalation. Emphasize that compliance is part of protecting the bank's license. Question 8. How would you handle an upset customer complaining about a banking issue? I would first listen without becoming defensive and confirm the customer's issue in plain language. Then I would check the facts, explain what can be done, and give a realistic timeline. If it involves fees, delays, or a failed transaction, I would follow NBK's escalation and control process. My aim is to protect the relationship while being accurate, compliant, and transparent about what the bank can and cannot do. Be sure to mention listening, fact-finding, empathy, clear timelines, escalation, and accurate communication. For NBK-style service roles, show professionalism without promising exceptions that breach policy or controls. Question 9. What is capital adequacy, and why is it important for NBK? Capital adequacy shows whether a bank can absorb losses and continue lending through stress. I would mention Common Equity Tier 1, total capital ratio, risk-weighted assets, and buffers. A loan does not consume capital equally. Riskier exposures carry higher weights. For NBK, strong capital supports credit ratings, customer confidence, dividend capacity, and room to grow responsibly across Kuwait and international markets. It also disciplines pricing and portfolio choices. While answering, focus on CET1, total capital, risk-weighted assets, buffers, stress absorption, and confidence. Explain that capital is both a regulatory requirement and a practical constraint on growth. Question 10. How do banks manage liquidity risk? Liquidity risk is the risk that a bank cannot meet obligations when due, even if it is solvent. I would discuss high-quality liquid assets, deposit stability, wholesale funding reliance, maturity gaps, LCR, and NSFR. A strong bank does not wait for stress to manage liquidity. It plans daily cash flows, contingency funding, and central bank access. That discipline is critical for depositor trust and franchise stability. Make sure to cover funding stability, maturity mismatches, high-quality liquid assets, LCR, NSFR, contingency plans, and depositor confidence. Strong answers distinguish liquidity problems from solvency problems. Question 11. How would you sell a banking product without mis-selling it? I would start with suitability, not the product target. For example, if a customer asks about an investment or loan, I would understand income, obligations, risk tolerance, time horizon, and purpose. Then I would explain benefits, costs, risks, eligibility, and alternatives clearly. Cross-selling is valuable only when it solves a real need. Done properly, it deepens trust and reduces complaints, conduct risk, and attrition later. In your answer, talk about suitability, customer need, affordability, risk disclosure, product features, pricing, and conduct risk. Show that you can grow revenue without mis-selling or damaging trust. Question 12. Tell me about a time you worked under pressure with a team. In a deadline situation, I prioritize clarity and ownership. In my last project, we had to reconcile data before a management review, and two inputs were inconsistent. I split the work, confirmed assumptions with the source team, and built a quick control check to avoid repeating errors. We delivered on time with a clean explanation. The lesson I would bring to NBK is to communicate early and solve problems calmly. Be sure to use a structured example with situation, task, action, and result. Highlight teamwork, ownership, quality control, communication, and calm execution under pressure clearly. Question 13. What opportunities and risks do you see in digital banking? Digital banking is now a core client expectation, not a side channel. I would focus on convenience, adoption, data quality, and operational resilience. At the same time, growth in mobile and online banking increases cyber, fraud, and privacy risks. My answer would balance innovation with controls, strong authentication, transaction monitoring, customer education, and incident response. For NBK, digital trust is part of brand trust every day. While answering, focus on digital adoption, customer convenience, operational resilience, fraud, cybersecurity, data privacy, and controls. NBK values innovation, but interviewers will expect you to balance growth with risk management. Question 14. Which macroeconomic factors in Kuwait would affect NBK's performance? For a Kuwait-focused bank, oil matters because it influences government spending, liquidity, business confidence, and credit demand. I would also watch interest rates, real estate activity, project awards, consumer employment, and regulatory policy. The point is not to make a macro speech, it is to connect those drivers to loan growth, deposit behavior, asset quality, and fee income. Good bankers translate economic signals into prudent decisions. Make sure to connect Kuwait's macro environment to banking outcomes. Oil prices, government spending, rates, liquidity, real estate, employment, credit demand, and asset quality trends. Question 15. What would you do if you discovered an error in a report or transaction? If I noticed an error in a report or transaction, I would not hide it or hope it disappears. I would assess materiality, inform my manager promptly, document the issue, and help correct the root cause. In banking, small control failures can become reputational or regulatory problems. I would rather escalate early with facts than protect my ego. That mindset fits a conservative institution like NBK. In your answer, talk about integrity, escalation, documentation, root cause correction, and learning from mistakes. Banks prefer candidates who surface issues early rather than hide operational or compliance risks. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.